I'd like to welcome you guys back to another episode of WealthWiseGuru. I'm your host, John Schaff. And I'd like to bid you guys top of the morning and welcome back to another episode of WealthWiseGuru. And I'm your host, John Schaff. And it is Friday, January the 17th, 2025. And we are about 20 minutes until and on the other side of the opening of the bell. And looks like we're going to start out this morning that we're down $1,200, the portfolio. We are investing this morning $23,800. And this is typical for a presidential year with Biden in his last days in office coming to a close. And the only thing we are doing now is waiting on Trump inauguration day. And from now and probably until March is when he starts implementing his policy. Sometime in March, sometimes when we should start seeing the market being affected by the new elect president policy. Until then, you're going to have a lot of volatility in the market going back and forth like it is now. Before all this happened, I was trading at about 28,000. And so now it's down to 23,800. And it's down this morning $1,200. And the thing about trading in the market is being able to sustain your portfolio, and you do that by continually to invest in the market. So what you look at today is there should be a day of you continually buying and loading up on stocks. It's just like you go into the store and they have a sale, and you go in and buy because they're having a sale. Same thing in the market. Now everything is on sale, so you need to continually to buy. You can get things at a cheaper rate than before, and so you use the same principle as, say, you're going to Walmart or going to a shoe store and it's on sale. Don't let it get to you that the market is down or there's so much red in your portfolio. Let's take a look at Tesla this morning. Looks like Tesla's down $4 and $5. This is regular dropping. I have 11 shares of Tesla, valued at $4,650. And that's the thing about my portfolio, is that I have built it up over a period of time to where when the market is going through such a volatility and as it is now, even though it hurts, I can still sustain until the market rebounds. Because I have like about 180 some holdings in my portfolio, and even though some of these stocks are down, you can place puts in these stocks to where you can make money whether the market is going down or whether the market is going up. And so that's the name of the game, is to make money no matter which way the market is moving. So let's take metal, for instance. It's down 4.78. It's trading at 605.95 this morning. I have 1.8 shares of it. The value of it is $1,100. So far today, I lost $8. Total gain on has been about 190.98. I usually don't go after individual companies. I'd rather just put me a put in the S&P 500 because there's too many companies or in the S&P 500. But if you want to go after an individual company like Meta, make sure you read up on it and what's going on with it, and find out why the market is why it's down. And if you're using Robinhood platform, you can go beneath your particular company and read about what's going on in the daily news of that company. And see, here's a TikTok bans heads for the Supreme Court today. What it means for Meta, Snap, and Ogle stocks. The Supreme Court will hear arguments today that decide the future of TikTok in the U.S. And President Trump is a fan of TikTok, so once he take office, he may even reverse this decision. If TikTok is banned later this month, there will be a significant ramification for Meta stock, as well as for companies that work with TikTok, such as Ogle. And the Supreme Court is hearing all arguments ahead of the January 19th date that the law will take effect. And that's signed by President Joe Biden last spring with bipartisan support. The law requires China-based the ByteDance to sell TikTok U.S. operation to another company. And if it doesn't, the app would be banned. And TikTok is challenging the law on the First Amendment's ground, calling the potential ban an unprecedented censorship for more than 170 million Americans who use the app. Here's what to know about stocks that could move on the Supreme Court deliberation and eventually ruling. I'm not gonna go into all this. There's a lot to read, but you guys get my drift. You need to stay up on the news. What's going on in the news and what's going on in the news can affect your portfolio, and that it can give you the reason why the stock is down. And say you wanted to put in countermeasures because this is going down just a little bit. You can hit trade options, and you can maybe go out to maybe March, like March 21st, and you can buy put. Current prices are 606.86. So anything below that is going to be out of the money, and anything above it is going to be into the money. So let's click on. Since it's a put, and we think it's going to be going down. It's interesting the way this is set up, though. Let's go out here to 600 and see what that is. That's a 42 delta, 49, which is good. Volatility of 38.78%. Chance of profit is 35.04%. Has a volume of 43. That means there are 43 current contracts in place, with another interest of 700 and 99 that are also interested in this particular strategy. You can either add it to your watch list by clicking on watch list, or you can purchase this particular strategy, and then you will hit buy, and then you go up here and put the one in, and then here you put the limiting price, which is over here. You're going to put the limiting price, type it in here. You want to make sure it say highly likelihood. If it doesn't, you need to change it around. And then we're going to go out in here and hit the break even, see what's happened when it's broken down. This is the loss column. The only way you lose is this if it's the market crash or metal crash, which formerly was Facebook. This black dot to the green dot is your profit. Black dot to the green dot is your profit. This is what it's going to cost you in order to implement this particular strategy. It's $3,590. Click review. So it's asking me for more buying power because I don't have enough buying power. So you will click on deposit. And then you'll submit this to your bank if you have this available in your bank. You submit that to your bank. And if you have instant deposit approval, then it will be approved right away. I'm not going to implement this. This is just for demonstration only. If you want to put a put against the metal, and like I said, you could, this particular strategy would profit you as much as $56,410. Or you can just simply add it to a watch list and see what it does. And this particular strategy works with any of the companies that you have in your portfolio. This is something else here. You guys that say you can't afford that stock, well, here's one you can't afford. This is American Airlines. American Airlines stocks are way undervalued. This is and during pre-pandemic, I think this was like up in the hundreds of dollars per stock. And since then, it hasn't really recovered just that much, but it's recovering. It's just a slow process. And so right now it's a good time to invest and load up on some airline stock. Airline, you can't do away with the airline. It's one of those things where it's too big to fail. And so right now, airline stocks are at a very cheap price. It's $18.15 a share. Now you can just buy it and hold on to it. I have 3 shares of it, and don't have much of it, but I am investing in airline stocks. Let me see if I can find Delta. So you got a lot of red this morning. It's a lot of red, so you should be loading up on these stocks. And no, do not pull back. Look at this. Look at this Delta, DAL, Delta. 67.21. See, that's what I'm saying. Delta was at $14 a share not too long ago. All of them was at that particular price. And see, it's starting to go back up. 14 now a share. And when that goes up, you need to make sure you have at least 100 shares. You build up over a period of time. Right now, I have 3. Market value at $219, And once it get back up to 100, 200, $200 or more, and this will be worth over $1,000. And if you keep on going up, you can go up to go $2,000, $3,000, and go up to $4,000, even 10. Either just depends on how many shares you have in your portfolio. And it's another one here. It's McDonald's. Everybody eats at McDonald's. It's at $2.85 a share. One while, but McDonald's dropped way down below, like it's 100, just a little over 100, and it's going back up, even though it's down today. Down today about $1.53. It's at 285.37. I don't have much stock in it, but it's a multi-million-dollar company. I have stock in lots of I have lots in my portfolio, and some of my overlooked. This is another stock. This is undervalued. AMD. AMD is normally about 250 or so a share. It's down to 114. And it's going to go back up. It's just a matter of time. So if you're buying this stock and it goes back up, and you have 100 shares of it in your portfolio, that can really affect your bottom line or the market value of this particular stock. And I do have an option in place on this particular stock, which is valued at $330. Well, actually, it's negative $330, but the option date is I think it's a call spread, credit spread, and the date is 9/19. I open it 1/6/2025. Expiration date is 9/19/2025. So far, the day is negative 18, but made a little gain of $6 total. So you definitely want to, and see, this gives me control over 100. This gives me control over 100 shares of this particular company by putting a call in it instead of me buying 100 shares of it. And that cost me, $27.35 and then $30.40. And it's like I said, this was a credit called credit spread, as you can see. This was a credit spread. So if I was to purchase 100 shares of AMD, let's see, no, I can't do it right now. I hate when things like that pop ups. So if I was to buy 100 shares of AMD, see, that's how much it will cost me. And this is why I do options. Options give you a chance to own or control 100 shares of a particular stock without having to come up with this kind of money. But then again, you can buy this over a period of time, a little bit at a time, and just wait and build it up until you have 100 shares of it. And see, here's another one. This is Amazon. See, all of them down today. It's down $5 and 50-some cents. And you can just, I have 3 shares of it, valued at $7.80. Down this morning by 19 cents. I mean $19. So far as profit 114. And if you can place a put in it. I'll go out to March. Buy and put. You guys see how difficult it is sometimes to do this on a cell phone. So a put means that you're expecting for it to be going down in value. This is current share price is 216.88. Anything below that is going to be out of the money. Anything above is going to be into the money. If it's a call, then it's going to work in the opposite direction. Anything above it will be out of the money. Anything below it be into the money. So let's go see 216. Let's go to 215 out of the money. See what that looks like. See, that's a 42 delta, which is excellent. Ideal would be, the higher the delta, the more chance of profit. Profit here is 34.56%. Volatility of 33.37. Has an open interest of 18, and volume of 18. The open interest is 2,306. And so you can just add to the watch list and see what it does if you don't want to implement this particular strategy. Now, if you was to purchase this, let's see how much it costs. Then you go up here and you put how many contracts you want. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I just placed for 1 there. Limiting prices over here. So we're going to go 11.10. And make sure this is saying a high likelihood. That means it's going to be accepted. If not, then you might have to play around with the numbers. Like I just did, change that 10 to 15. And you go out and hit this. This is your loss column. This is definitely not going to have much the company crash or they start doing bad businesses, so you don't have to worry about that. So the black dot on up is your profit. Who here can't use $20,000 profit? Okay. Yeah, but this is gonna cost you. It ain't free to implement this particular strategy. That's how much you need to implement this particular strategy. And once you implement these particular strategies in your portfolio and you have Robinhood, then these strategies are going to show up right here. And these are the strategies that I have already implemented. Green means it's positive, it's going up in value. Red means that it's on sale. And so if you have one like this one, so for instance, that's going against me, you can hit trade. You can hit trade options, and you can hit roll position. And then you go out here and select new date. And the current date for that particular strategy is January 17th. We can go back out until maybe March 21st. This is the current striking point is 236.16. This is going to be a call. I mean, we're expecting for it to go up in value. It's going to be a roll. A roll means we're rolling it out of the current position into a new position. And so let's see, it's at 236.16. Anything above that price is going to be out of the money. Anything below is going to be into the money. So let's just go out of the money at 240. Look at that and see what that's going to look like. Has a delta of 49.40. Chance of profit 31.77%. Volume of 349, which is current contracts that are in place. It has an open interest of almost 10,000 with a volatility, IB's volatility of 24.31%. You will click roll position. Then you will hit continue. Then you go up here and hit 1. See, you hit 1 contract. Then you go here and hit 9.45. Okay, that didn't work, so we hit 9. $9.40. Alright, $9.45. And I'm getting these numbers from over here where they say limiting price. That's where the numbers coming from. So the market is constantly moving. And so you have to kind of adjust to until you see it say high likelihood. Let's see. And sometimes it works, sometimes it don't work. If it doesn't work, that means that you might just have to eat this loss. You can go with median and see what happens. And then you will click that and say need more buying power. And so I would need $934 and 72 cents in order to say this particular strategy. And I did that once, and it was at 1, like this particular one is. And then I was able to save it and make $1,500 off of it. This is, I think this is, okay, yeah, this is Apple, which is down by $6.26. And so, like I said, I was able to roll this out of this position to another position where it cost me, if I was to roll this particular option, it would cost me $900. So I do better just letting it die, and it just expire worthless than to try to spend me even more money on it. Cause see, that's why it went bad. Cause it has a very low delta 12. And so that's why you have to watch when you do options. You can just watch these numbers, and when and you'll know by the numbers. The numbers is seem to be going bad, and then it would give you a warning, like a watch list warning. Or it'll tell you something like Pioneer, since you open Pioneer, it has lost 20%, it has lost 30%, it lost 40%, 50%. When you get 50%, you should be concerned. When you get 75%, you need to go ahead and sell it out, or either roll that position, because you still have, at 75%, you still have enough to make a profit. But anything above that, then you are into the loss column. And this is crypto, Bitcoin for all you guys that, that's into crypto. Crypto does nothing really but basically follow the market. And as you can see, the market is down. So when the market down, crypto going to be down too. I don't really fool with crypto too tough, man. I think it's trash. And let's see, the value of my whole stock, this particular portfolio, value of it is $65,705. It's down by $15.39 today. And these are the holdings that I have in my portfolio, and you are welcome to copy them and have it in your portfolio as well. Some of them are big, like Google, and then some of them are not. And you are viewing another episode of WealthWiseGuru. I'm your host, John Shaft. And we didn't have a video up on yesterday because the market was closed in honor of late President Jimmy Carter services. Nvidia in 14,000 is in the red today. Pioneer Technologies in the red. Still have 9,900 some dollars. And again, these are the holdings that I have in my portfolio. You can just buy these holdings and build up your portfolio with just the holdings if you are too afraid to get into options. So far here, $14 still have an excellent buy. I have 170 shares of it. Value at $1,500. So I bought this over a period of time. When this goes to $70 or $100, this is gonna go to $10,000. So that's why you buy it when it's low like this. And that's gonna do it for today's video. Hopefully I have said something that'll taught you guys something new when it comes to investing in the stock market. And if nothing else happens significantly that affects the market, then I would see you guys again on Monday morning at the opening of the bell. Until then, may all your trades be a good one. Have a blessed and safe day and a even better weekend. And we'll see you guys again on Monday morning. And we thank you for watching.